I want to walk you through why I didn't trade Netflix as a part of my earnings strategy and why not trading it was a really good move. On top of that, let's do a quick update of how the earnings strategy is going for this season and how these changes that we talked about in the last video have been playing out so far. So first up, let's talk about Netflix. So if you remember from the last video, I told you I'm changing the way that I go about using the straddle backtest and historical moves, where now rather than looking for a good straddle backtest, let's say, what I'm really looking for is a pattern of short volatility working. So I want to see most of the time there's small winners, occasionally there's big losers. If those big losers have outpaced the small winners on the backtest, then so be it. It's not going to bother me because the sample size is small. But if we see, for example, that all of the time the implied move and realized move are similar to each other, or like the implied move is often getting outpaced by the realized move, then I'm going to stay away from that ticker because there's just no juice there, it seems. There's no risk premium being baked in. And that's basically what we see when we look at Netflix. This is why I'm not selling options here around earnings. And maybe I should have been buying options actually. So coming in here, obviously these implied move numbers have changed and stuff. But what we'll focus on is this graph here to start. So if we take a look at this, we can see that there are times where like the realized move is much less than implied. But across the board, it seems like at least on 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 out of 16 events that we've tracked, the implied move is pretty much break even with or greater than the realized move is pretty much break even or greater than the implied move, meaning options are not making money for us selling here on average. The nature of short volatility is that we should make money on average and then lose money once in a while. When we are seeing that not be the case, it makes me feel like the market doesn't know how to price vol around this event. And so for that reason, no trade, didn't take it. And then obviously that was a good move because the implied move I think was like 8%. It moved 13% on the open. Now one thing I'm starting to think is that maybe these are good long vol trades. But there is a saying where it's like just because you don't see a risk premium doesn't mean that you take the trade, because if there was no risk premium, we wouldn't even be trading options to begin with, most likely. So the absence of the reason to sell vol is not the reason to be buying vol. So I just didn't place a trade. Shout out to the guys in the community that did actually take a trade here. That's a huge winner. I envy you. No, I'm joking. That's cool. All right, so that's the main reason I did not take this trade here. There's just no juice for me. I didn't see it. And looks like I was on the right side of that one this time. So let's talk about the portfolio quickly. I'm excited to share this with you. If we hop over to this here, sorry for switching to a white screen and blinding you. I didn't think it would have like all white at the start there. So season started off a little bit rough, but we've recovered. Over the last week, we have pretty much made back the L that we took at the start, where basically all the banks moved correlated to one another on that first day. That was a rough day. But since then, things have really normalized in terms of what we expect from earnings. It's pretty much looked exactly what I expect the season to move on average, like how I expect the season to go. Occasionally you lose money, but your winners are outpacing your losers, and you should generate a return over time if you take enough of these trades. A major change that we made this season, which is working well so far, and I feel good about it, is taking a much greater volume of trades. So sizing down slightly, taking on more trades. We're probably going to place like 150 to 200 trades this season compared to the 100 we placed last season. And the reason for this, to reiterate from the last video, if you haven't seen that video, go to the channel, check it out. It's worth watching. I outlined the strategy I'm following. The reason we're taking more trades is the earnings event itself is the edge. Sell vol over earnings is the reason we get paid. So fundamentally, we want to be doing that as much as possible. We want to be placing a higher volume of trades on that. So I basically use a liquidity filter. That's the main one. Besides liquidity, I told you how I use the backtest. That's not to qualify things. That's just straight up to disqualify things. And then there was like one or two other small things I look at. but I explained it all in the last video. And that's where we sit for the season so far. We did about 1% on the account today, which was pretty sweet. But that's including a couple of the other strategies that we have on as well, like the ETF strategy, which is in the academy. And I've been doing some calendar spreads as well. So for example, this ABT trade here, this is a calendar spread. Yeah, overall, everything's good. We've got, I'm sure, a whole roster of tickers to look at for today. Come over and take a quick look at the scanner. Sorry, the app is not actually this laggy. It's because I'm recording and I have IBKR open. My computer apparently just explodes when I do that. So earnings premium, let's see what's on the list today. Yeah, so we got 20 tickers on this list. Any of these that are liquid, I'm probably going to be trading. So there'll be, once again, a huge number of trades on the list for today. I'm looking forward to it. All right, everyone, if you have any questions about what we talked about in this video, please leave a comment. If not, then I'll catch you in the next update for this series. Peace out.